Futures lower, bonds higher after soft PPI. 30 minutes until the official start of trading. I'm Katie Greifeld.
And I'm Romaine Bostick. Matt Miller is on assignment. Bloomberg Open Interest. It starts right now.
Coming up, a Boeing airplane crashes in India. It's said to be the worst accident involving the plane maker's most advanced wide-body airliner. Meanwhile, reigniting trade tensions, President Trump plans to set unilateral tariff rates within the next 2 weeks, ahead of an earlier deadline. And software stocks in the spotlight after Oracle delivers an upbeat forecast. Next up, Adobe reports after the bell. Romaine, what else are we keeping an eye on?
Also keeping an eye on chip stocks. The Philadelphia Semiconductor Index looks like it's going to open lower. Micron, part of the drag, down about 0.8%, following news this morning that it's investing as much as $200 billion in U.S. chip manufacturing and research for an unspecified timeline, an investment that includes some projects already underway, Katie.
Meanwhile, back to that other big story, and that is that a Boeing 787 Dreamliner operated by Air India crashed shortly after taking off earlier this morning in Western India. The plane was heading to Gatwick Airport outside London with 242 passengers and crew on board. For more, we're joined now by Bloomberg's global aviation correspondent, Sid Phillips. Sid, this is a developing story. There's a lot we don't know, but give us the details as we know them right now.
Morning, Katie. So we're obviously still trying to figure out what happened and what caused the crash. But at the moment, we do know that this plane crashed shortly after taking off. It had reached an altitude of about 625 feet when it crashed into a residential building. We understand that there were no survivors on the plane, and we also understand that because it crashed into a residential building, there may be some casualties on the ground as well. So the death toll might actually go up beyond the 242 passengers and crew that were on board the aircraft. This is obviously, as you mentioned, the first ever fatal accident for the 787. I mean, this is Boeing's most advanced model and has been in service for over a decade now. But this is a sort of significant blow to both Air India and Boeing.
Sid, I know it's still early in the investigations. Of course, a tragedy just occurred just about 4 or 5 hours ago. But do we have any insights into whether Indian authorities are receiving help from U.S. authorities and European authorities as well?
So typically investigations are led by the country where the accident occurred in, but also the NTSB and the FAA said that they would be willing to help if required in the investigation. And typically NTSB, FAA, the manufacturer of the aircraft, in this case Boeing, as well as the engine manufacturer GE, would all be involved in the investigation and contribute towards the investigation as to what really went wrong.
All right, Sid Phillips there of Bloomberg News. We are continuing to keep an eye on what is still a fast-moving story. A lot of conflicting reports here about whether there are survivors or not. We will keep you posted on that. We are learning as well right now that in the U.S., the National Transportation Safety Board, in a post on the social media platform X, has said that it does plan to go to India to assist Katie in that accident probe.
Yeah, and to your point that this is a developing situation, this coming from the Ahmedabad police chief saying that 204 bodies have been found at the Air India crash site, also saying that there may be survivors, 41 are injured, but of course we will bring you those details as we have them.
All right, obviously a developing story, and we will continue to follow this. We are going to make a pivot to talk about some of the other movers going on right now in the pre-market here in the U.S., and that includes Micron. The memory chip maker just announced a $200 billion investment in U.S. chip manufacturing and R&D. The co-host of Bloomberg Technology joins us right now, Caroline Hyde. All right, Caroline, there's been a lot of headlines over the past few months of various chip companies making big announcements about what they plan to invest in the U.S. $200 billion. That's a lot of money. Where's it is.
Going? And the question is how much of that is new?
Yeah.
And I think we'll see, they're saying, look, $30 billion is new when you're putting it into manufacturing here in the United States. Idaho is going to be the big area, second memory fab in Boise, Idaho. They're looking at Virginia as well, modernizing a facility there. They're already building a lot in New York. That was already scheduled. Already that money was being put towards that, a mega fab. High bandwidth memory, though, is the really interesting part. It's about the packaging part of the equation. They say that they're going to be basically packaging capabilities in the US to enable long-term growth in high bandwidth memory. That is basically what NVIDIA has been totally dependent on SK Hynix for. Samsung hasn't managed to get it up to speed. It's crucial for the next iterations of generative AI chips that we're getting through the pipe. So this is going to be crucial to have it here in the United States. But look, $30 billion is new. And what's also notable, Romain, they are still getting CHIPS Act money. And I think that's always been a question as to how much the Commerce Secretary, Howard Lutnick, would hold that back. But they are still going to get some federal funding for all of this.
Yeah, CHIPS Act. I haven't heard that name in a long time. Let's talk a little bit about Oracle, too. That is one of the biggest movers pre-market, up nearly 9% before the bells rang. Of course, they reported, and it seems like AI infrastructure is still one of the hot plays out there.
And look, this is what makes these two stories so interesting together. The issue here is supply. The issue is we cannot live up to the scale of demand. That's why Micron is putting more money to work. This is why Oracle, Larry Ellison said on the call, we have got a new client who says they will take everything from us. Capacity, no matter where we put it, Europe, Asia, in the United States. He says he's never had an order like that. Their issue, the reason why actual fiscal fourth quarter cloud sales didn't live up to expectations, it's a supply side. They cannot build fast enough. So this is why they're still committing to Stargate, why they're still trying to bring more infrastructure on tap. They want to be one of the biggest cloud infrastructure players out there. Remember, they're a software company, but now they're an AI cloud compute offering, basically, and boy, is it going to drive their overall sales higher. About 70% increase they're expecting for the next fiscal year. Investors, they love it.
Yeah, that seems to be the logic working its way through shares right now. Caroline, appreciate your reporting. You can catch more from Caroline, Bloomberg Tech co-host, at 11 a.m. But let's get to that trade news now, because President Donald Trump has once again threatened to impose higher duties on dozens of trade partners. Here's what he had to say last night.
We're going to be sending letters out in about a week and a half, 2 weeks, to countries, telling them what the deal is, like I did with EU.
Now, while the U.S. dollar is at a low for the year, market reaction to the announcements like this, it's been less volatile, with investors recognizing Trump's use of uncertainty as trade leverage. Bloomberg macro strategist Simon White has been reporting on how tariff risks are underpriced in markets. And Simon, there's many different ways to take this sort of muted reaction that we've seen in the equity market. You could make the case that maybe investors are just fatigued at this point from the back and forth.
Quite possibly. I mean, the marginal kind of impact from, increasing noisy kind of headlines will leave people, obviously, as you say, fatigued. I think it's kind of interesting, though, the markets kind of went from zero to hero very quickly. In the wake of the initial tariffs, we had this very sharp sell-off, and now we're within a few percent of all-time highs again. Now, the tariff news is not as bad as was first feared, but it's still, tariffs are going to settle probably higher than they've been since the 1930s. So it's kind of like the markets went one step backwards and 2 steps forward, which is kind of remarkable. But I think actually a lot of that is to do with the rebound in excess liquidity. Excess liquidity is a dollar measure. It's the difference between real money growth and economic growth. And what's basically happened is because the dollar has weakened, it's meant liquidity produced in other parts of the world, in dollar terms, is now worth more. And that's actually created this rebound in excess liquidity. And I think that's what's helping to keep the market more supported than otherwise you might have expected.
It gets to this idea of a floor being put into the market. It's certainly here on the U.S. side, Simon, but when we talk about what the potential upside is, whether you claw back to that all-time high on the S&P 500, does that trade risk have to be taken off the table at some point?
Well, I think the market, if it's shown as anything in recent years, it's when it gets to new highs, it often does breach them. And then you get the FOMO kicking in. You'll get people saying, right, I've maybe got this completely wrong. And that money then chases the new highs and it becomes self-fulfilling. I think this particular instance in the bull market, I think it's harder to fashion an argument, even when we're so near new highs, that the bull market is ready to kind of like continue unfettered. Just given the backdrop, as I say, the tariff backdrop alone is telling you that the situation is not as good as it was a few months ago, right, where we're going to end up. And the policy uncertainty, plus a number of other factors, as I say, liquidity's rebounded, but it's still not as high as it was before. You really just don't have the set circumstances that were going to provide such a tailwind to the market as we had before.
Well, Simon, in your view, what is the catalyst that we're waiting for? Because we were having this conversation at 6 in the morning. We've had pretty good economic data this week. We've had back and forth on trade, but the direction seems to be positive. Even the Treasury auctions that we were all in a twist about seem to be going pretty well. And with all of that in mind, to see the S&P 500 falling now set for a second day here, I mean, what is the catalyst that this market would want to see?
I think, well, you just had your previous piece there. I mean, the tariff situation is still live. So although that the latest estimate is maybe 15% average tariff rate, again, that is still as higher than it's been since the 30s, we don't actually know 100% yet. So that level of uncertainty really will keep people from sort of pushing the buy button with abandon. So I certainly think that's holding people back. But as I say, overall, the general environment is really just not as propitious for stocks as it was before. That's not to say the market won't try and make a new high, but I really think it's going to be hard to do it with particular gusto. And as I say, even if it does go through new highs, and part of that's momentum driven because people have FOMO, I really think that even then that rally is on pretty thin ground.
Yeah, it just seems like we move from the cycle of FOMO to wait and see and back again. Our thanks to Bloomberg's Simon White. Meanwhile, let's get a check on futures right now. About 20 minutes ago, until those bells ring, you can see pretty quiet when it comes to the S&P 500 right now. A lot of the action is in the bond market, if we can pull that up. And as you can see, 10-year Treasury yields down about 7 basis points at this moment. Romain, once again, it feels like a lot of the action is in the bond market rather than in the equity market.
Yeah, a big drop. And we talk about just how much yields have come down. I think we're down something like 15 basis points just on this week on the 2-year, 11 or so on the 30-year. And we have a big auction later today. The economic data, we got another benign inflation report on PPI. But I thought that jump in jobless claims that we saw, highest level since 2021, that's got to be of concern, at least if you're a bond investor.
Absolutely. I mean, we didn't see that kind of story show up in last week's NFP report, but you keep adding together all these weeks and maybe it'll start to show up. I did also want to point out the dollar. We don't normally talk about the dollar at like 9-11 in the morning, but we're close to the lowest level in 3 years on the Bloomberg Dollar Index.
Yeah, and it's been a big driver. I think Simon White kind of touched on this inarticulately, but it gets to this idea of just how much the dollar does fold into the equity trade here as well. We're going to talk about some of the individual movers on the day. We talked about Oracle, Micron. How about Biontech? Company buying a former COVID vaccine rival. Details on that deal coming up next. This is Bloomberg Open Interest. Time now for high interest, a look at what's making headlines around the world, and we start in Los Angeles. Downtown LA calmer today with a heavy police presence designed to prevent a repeat of the unrest that has already led to about 600 arrests since the weekend. The Los Angeles Police Department last night using horses and less lethal weapons to clear out protesters. Protesters upset over the questionable tactics used by federal agents who enforce immigration laws. Those protests now spreading to other cities, though, including Spokane, Washington, where the mayor there issued a curfew and police made 30 arrests. Meanwhile, Warner Brothers Discovery's decision to split into 2 companies is a sign of a broader shakeout across the media industry. That's according to Netflix co-CEO Greg Peters. He sat down earlier in an exclusive interview with Bloomberg editor-in-chief John Micklethwaite, where he talked about the increasing dominance of on-demand services and the expansion of the streaming giant abroad.
There's a lot in Asia, and we're just younger in Asia. We've got more work to go do to improve the offering there. We think about, oftentimes in countries you start at a center in terms of the content and the offering and how it's presented to market, and then you start to expand out. And there's many countries that we've got a lot more room to grow in Asia.
Well, back here in New York, if you're a renter in Manhattan, my condolences. Apartment rents hitting a record high last month and shows no signs of stopping. That's thanks to the city's new broker fee law. Demand is also expected to soar as a large share of existing leases expire and students and recent graduates flood into the city. The median price tag on new Manhattan leases in May, more than $4,500.
Well, in less depressing news, shares in Biontech and Curevac in focus this morning. That's following the announcement that the German biotech giant agreed to buy its former COVID vaccine rival in a $1.25 billion all-stock deal. Bloomberg health reporter Damien Garde joins us now at the desk. So, Damien, these 2 companies were rivals for decades. Why are they combining now? What does that bring to these companies?
It's interesting. It's kind of a sliding doors moment for these two firms, which, as you've mentioned, have been working on mRNA since long before it was a household term. It was kind of a speculative idea in biotech. And back before the pandemic, they took basically forking paths scientifically. Biontech made one decision in terms of how it approached mRNA. Curevac bet on the other decision. And what we saw is Biontech, along with Pfizer, developed a vaccine that made billions of dollars and was put into the arms of millions of people around the world. Curevac never managed to actually get its vaccine off the ground. Cut to now, Biontech has soared, both in terms of its market value and its success in the clinic. Curevac not so much, such that the former is in the position to buy the latter in an all-stock transaction. So it is kind of it would prove to be a somewhat whimpering end for Curevac given the length of time they've been in this space.
By the way, Sliding Doors, one of Gwyneth Paltrow's greatest movies ever made, by the way. So I like the rom-com reference. When we talk about what they're actually developing, these cancer immunotherapies, is it for a specific type of cancer?
There's a multitude. So both firms have been working on, with mRNA and with other technologies, immunotherapies that would treat tumors all over the body based on different genetic signatures. So what Biontech is signing up to get from Curevac is basically odds and ends in that company's pipeline that would complement, I think, the work they're already doing. Curevac, it's worth noting, had sold off its vaccine capabilities to GSK last year. So they remain a cancer-focused company.
Situate this deal in the political backdrop, because Bloomberg News reported last night that the Health and Human Services Secretary, Robert F. Kennedy Jr., has appointed a new panel for its vaccine panel, 8 new members. What does that possibly mean for these companies and others in this space going forward?
It's an interesting time to be in messenger RNA, because among the 8 people that RFK Jr. appointed to this very powerful panel that serves under CDC are people who've expressed not just skepticism, but have advanced easily debunked theories about the safety of mRNA. They will soon be empowered to set U.S. vaccine policy functionally. They don't decide what gets approved or rejected.
Wait, I'm sorry, it's unsafe? Is that what you said?
I'm sorry. So among the members of the new CDC panel are people who have advanced, debunked theories about the safety of mRNA vaccines, including, I mean, it's not worth digging into probably in live, but
I didn't mean to interrupt you.
No. So there's legitimately concerns, both for the companies and from public health officials, that what this could mean for vaccine policy in the U.S. going forward as to which vaccines are recommended for which populations.
All right, well, it'll be really interesting to see how this combination navigates that environment going forward. Really appreciate your time. That is Bloomberg's Damian Garde. He covers health for us over at Bloomberg News. Let's take a look at some of the other movers on our radar as we count down to that opening bell. I want to talk about Mattel here, rising on a collaboration with OpenAI. I wasn't quite expecting this one. Yeah, so I'm confused. Are they going to use AI to make the toys, or is AI going to be embedded into the toys in some way or another? These are a lot of great questions. What does it mean for your Barbies? I'm not sure, but we'll bring you more details. They're going to be more expensive? Maybe they're going to be more intelligent, too. Let's also talk about Voyager. It's a space firm. It's extending gains after it raised $383 million in an upsized IPO yesterday. Those gains continuing today. It rose 82% yesterday. Yeah, and it's cool too also to see just kind of the reopening of the IPO market overall. We should also talk about GameStop, shall we? Do we have to? We do. Oh, okay. Well, it's falling 17%. It has plans to offer $1.75 billion worth of convertible bonds. Yeah. This would theoretically make the video game retailer one of the year's biggest issuers of the equity-linked securities strategy. Has also been big in that space. And of course, they're trying to move deeper into that Bitcoin space. When we come back after the break, BMO's Carol Schleif talking about the wall of worry for investors as markets see more muted reaction to economic data and Washington policy. This is Open Interest.
I think the biggest threat to the stock market has been our fiscal profligacy, something like the big beautiful bill, because that was always going to be a threat to the safety and security of the bond market, whether investors would tolerate what's going on. And right now it seems like both globally and domestically that the world's okay with kayfabe, kicking the can down the road. We're going to suspend reality. It's okay.
That was Paul Tudor Jones speaking with us yesterday. And let's keep that conversation going with Carol Schleif. She is Chief Market Strategist over at BMO Private Wealth. So, Carol, Paul Tudor Jones, his view is basically it seems like markets are okay kicking the can down the road right now. That seems to align with your view that stocks here, they can continue to climb this wall of worry.
I do think from an equity market perspective, that's pretty accurate. But on the other hand, I do think we're watching very closely what's going on in the bond market. And because you've seen some hiccups this year, we've kicked that debt can down the road for decades, basically, we and a lot of the other industrialized countries. But you're starting to see some objections, particularly from those longer term fixed income investors, that they may not be so happy doing that. So it's a very delicate balance. But for now, especially in the equity markets, the U.S. markets have round tripped. We're back to basically flat for the year after 2 very solid years. But economically, there's still a lot going right underneath the surface, even while everyone's waiting for another tariff shoe to drop. We haven't seen it come through the numbers in a big way.
Are the markets, the bond market and the equity market, Carol, are they singing from the same hymnal here?
I think you've got different investors with different objectives, because equity markets are looking for gains. That's why people buy equities, is hoping for that long-term capital gains. On the other hand, the fixed income markets, particularly as you go out to those 10, 15, 20-year sorts of maturities, they're operating like creditors. And so they're a lot more concerned about the balance sheet than the income statement.
All right, Carol, we are just getting started. Carol Schleif is sticking with us through the opening bell, and here's your setup. Minutes away, you can see the S&P 500 down slightly. So is the NASDAQ 100, the Russell 2000, those small caps a little bit more. We'll walk you through all of the action up next at the open. This is Open Interest. All right, we are moments away from the start of trading on this Thursday. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld, and we're looking at a market that's really deciding what to do near record highs. You can see the S&P 500 now down about 0.2% as we await these opening bells. You can hear them ringing right now. We ended above 6,000 yesterday, even with that drawdown, breaking 3 straight days of gains. Now the question is, where do we go from here? We're still very much getting that back and forth when it comes to tariffs. We've gotten better than expected inflation data this week when it comes to CPI, when it comes to PPI. We'll see what that means for the Fed next Wednesday. We also have some auctions when it comes to the bond market. Yesterday went okay. We'll see how 1 p.m. goes today. But as we focus on this equity market bell ringing, Romaine, who do we have an eye on?
Well, we're keeping an eye right now on Micron, I believe, and some of the chip stocks here. Micron is said to be investing $200 billion in U.S. chip manufacturing and research in plans to create an estimated 90,000 direct jobs. Not the right ticker on the screen. Micron down about 2% at the open.
Well, you had an eye on Boeing, so let's talk about that a little bit more, because a Boeing 787 Dreamliner, it was operated by Air India. It crashed shortly after taking off earlier this morning in Western India. That plane was heading to Gatwick Airport outside London with 242 passengers and crew on board. And as such, we're also taking a look at some of its suppliers right now of Boeing. You can see Spirit Aerosystems taking a little bit of a leg lower this morning. So too is General Electric, and you also have Triumph Group down a little bit as these markets open, Romaine.
All right, let's bring Carol Schleif back into the conversation. BMO Private Wealth Chief Market Strategist here. As we look at somewhat fractional open lower here on an S&P 500. Carol, an S&P 500 that's still trying to grasp back towards that record high, 6144 and change. We're about 2% away from that. And I do wonder, given the somewhat holding pattern that we've been in over the past few days, what is that catalyst that potentially gets us there?
Well, probably near term, not much, because we are in quiet period waiting for the Fed meeting next week. Don't expect a lot out of the Fed meeting other than maybe some commentary. The interest obviously will be in the Q&A at the press conference after the meeting, not necessarily anyone waiting on tenterhooks for the decision itself. But catalysts for the short term, we'll have to basically wait until we start getting earnings announced in 3-4 weeks. And there's not a whole lot to go in here other than announcements, because as you talked about in the lead up, you've got the back and forth on tariffs still in process. Who knows if we get some conversation out of the G7 meetings that start this weekend. But there's a lot of potential for news flow and not anything really economic to hang our hats on too much in the very short term.
With that in mind, I mean, we were talking about this with Simon White. It feels like we cycle through FOMO to wait and see to FOMO again. Right now, it feels like we're very much in a wait and see sort of vacuum here, Carol. And with that in mind, what is your highest conviction in this market?
I think the highest conviction is that diversified portfolios have been working, because for years we have tried to talk to investors about being diversified, and all anyone wanted to own was U.S. And so while you've got U.S. within a couple % of all-time highs, you've got a lot of those international markets that have really snapped back, done very well this year. The TSX, for example, the Canadian exchanges at all-time highs. So you've got a lot going on elsewhere. So having that diversified portfolio, making sure you've got toes in a lot of different camps, if you will, just to make sure no matter which way this swings, the news swings, because you do have a lot going on globally as well. You've got a lot of interesting things going on in developed markets. The EU is making some big investments in infrastructure. You've got things going on in China, things going on in Japan. So it's really a great time to be able to step back, keep your exposure in the US, but also look globally.
With regards to that exposure in the U.S., I am curious about kind of the health of the AI trade, and more importantly, of chip stocks in particular. You look at where we were off of those lows back on April 8th, and at the top of the leaderboard is just a slew of those big tech names, primarily names that are in the chip space. Is that still investable? Is that still of value?
We definitely think you still want to have some of that exposure in your portfolio, but keep in mind you get a lot of that exposure just by buying a passive index because of the preponderance they are of indexes. But yeah, we think there are a lot of things that we don't think the growth trade is through. We think you've got the opportunity for high quality growth in here. When you look at the private sector spend that's been going on in terms of continuing to build up that AI, the quantum, the data center, the move to the cloud, there's a lot of that activity going on. And employers, as they try to figure out how to absorb the cost of tariffs, because they know consumers don't want to see it passed along, as they try to figure that out, a lot of that, it depends on continued technological deployment throughout their infrastructure and their processes and procedures. And you're seeing it some in the hiring market where you've got some softness at the edges.
Absolutely. I mean, that takes us back to the claims data that we got this morning. Carol, great to spend some time with you. That is BMO Private Wealth's Carol Schleif. Meanwhile, let's take a stock of this market right now with the S&P 500 trading on a nice edge near 6,000. You actually have pretty bad breath when you take a look overall. The S&P 500 down by about 0.3%. We do have some heavy hitters in the green when it comes to those 132 names that are positive. Right now, right at the top, you have Oracle. Remember, this company reported earnings yesterday showing that demand for AI infrastructure remains robust. That's good for a 9% gain. You also have Microsoft, Nvidia, Netflix, Eli Lilly trading places here up at the top, but they're fighting against quite a strong current when you consider that you have Amazon, Meta, Alphabet, Tesla, all lower this morning. So a real push and pull in this market. Let's take a look at how that looks at the sector level as well. Up at the top, you do have utilities up there. That looks a little bit defensive this morning. You also have technology still managing to go green, as too is healthcare, with news of that Biontech and Curevac deal. But then you take a look at the bottom, a sea of red as you go down the list. Right at the bottom, you have energy, industrials, and financials is your biggest loser today, Romaine. That sector down about 0.8%. All
right, let's take a look at chip stocks. The Philadelphia Semiconductor Index rallied 2% on Monday, 2% on Tuesday, pulled back yesterday and pulling back here on this Thursday morning. Micron, one of the biggest drags. This after it made an announcement about a $200 billion U.S. investment here in the great United States of America. Jake Silverman is a semiconductors analyst for Bloomberg Intelligence, and he joins us right now. And we need to be very clear about what we're talking about here with that $200 billion. We're talking about an increase in what was already previously announced of roughly about $30 billion, an investment to, I guess, open new plants or expand plants in Idaho and in Virginia. Is that what we're talking about here?
Yeah, that sounds right. I mean, The Micron strategy has been to increase their domestic supply in the United States. They've already committed to fabs in New York and Idaho, and this is really just an extension of that, both in terms of CapEx, but also R&D as well.
And so talk to us about the timeline here. I mean, $200 billion, that is a big headline figure, but how many years are we talking about to spread out that investment?
Yeah, I think Micron's been pretty clear this is an investment that's probably going to take place over several decades. If you look at the cash they have on their balance sheet and the reasonable amount of free cash flow they can generate over the next several years, it's really an investment that's going to take place over a very long time span. So not necessarily something that we're going to see overnight.
When I think of DRAM makers, memory chip makers, I think about just how heavily cyclical that market is. Is that smoothing out? And if not, when you make these types of investments, how can they be sure that that demand's going to be there once these plants are up and running?
Well, yeah, I mean, over time, the demand for memory has continued to grow fairly consistently. Obviously, you know, plus or minus a cycle, right? But whether or not it's smoothing out, it's a little unclear. I think high bandwidth memory demand for products in AI, obviously that's you know, a structural driver. We still expect there to be cycles over the long term, but demand for memory will likely continue to grow over a very long period of time. And so I think it's reasonable to expect that these investments that as they build it, the demand will eventually be there.
Yeah. All right, build it and they will come. Jake, great to get some time with you. That is Jake Silverman of Bloomberg Intelligence. Now coming up, as we've been discussing this morning, an Air India Boeing 787 aircraft with over 240 people on board crashed this morning in Western India. We'll talk about it next. This is Open Interest. Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Joby Aviation getting downgraded over at Cantor because of its valuation. The firm also says that the EV aircraft maker has the highest cash burn in the industry. Not what you want to see. Shares down about 4%. Next up, Stifel resuming its coverage of Freshpet with a buy rating. The firm says that the company has a long runway for growth. That's good for a 1% rise in shares. And we end with SoFi Technologies getting initiated with a buy over at Stephens. The firm says that the online personal finance company has strong growth prospects. Not showing up in shares this morning. Romaine, shares down about 1%.
All right, we do have to go back to this morning's top story, and that is, of course, that horrific aircraft crash in India at about 1:39 p.m. local time. That's roughly about 4 a.m. here on the East Coast. A plane crashed there in Western India. Over 200 people have been found dead at the crash site, a Boeing 787 Dreamliner operated by Air India that was bound for London. That flight crashed shortly after taking off in what was now the worst accident involving Boeing's most advanced aircraft. Now, officials haven't yet said how many of those people were passengers, crew, or area residents. Police say there may be survivors. Brooke Sutherland covers Boeing for us here on the U.S. side, and she joins us right now. And obviously, there's a lot that we don't know, Brooke, about the cause of this crash, and of course, it will take a long time. We do know that the NTSB, the U.S. agency that investigates flight crashes, is going to India to assist in this investigation. What do we know so far right now?
We don't know very much right now, and it is very early days, and like you said, I mean, it will take a while to figure out what exactly happened here. We do know that this particular plane was over 12 years old, which means it's been flying for a while. There are many 787 Dreamliners flying in the world, and this is the first crash that we have had for this plane. Now, there had been earlier issues with it, but not a crash. And so we'll learn more as we dig into this, but obviously it comes on the back of a series of safety incidents in the aviation world that's really sort of rocked this bedrock thought that, you know, this was one of the safest modes of travel. And I think, you know, that is going to be impactful, especially as we look at the travel demand environment already feeling some pressure in the U.S., just from inflation concerns, consumer spending pullback, and then inbound travel internationally into the U.S. has also taken a hit just from some of the political positions of the Trump administration. So this will just sort of compound some of those issues facing the travel market going forward.
And it's worth pointing out that the Paris Air Show is scheduled to start on Monday. Boeing's CEO, Kelly Ortberg, is scheduled to attend, or had been as of this morning. And Brooke, put this into context. You touched on some of this, but Boeing unfortunately, is no stranger to safety incidents. So what does this say about the company's path forward and how they're going to address this?
I think it's too early to say that this is a Boeing issue. Like I said, this plane has been flying for about 12 years. And so at this point, there's just a lot that we don't know, in terms of the maintenance history of this plane, what the pilots did, what the circumstances were. And so it's too early to say, whether or not this is something that will ultimately make its way back to Boeing. But you were obviously seeing the stock reacting today. And I think that reflects, like you said, that this is not the first safety incident that has happened in recent years with a Boeing airplane. The most recent, of course, was that mid-air blowout on an Alaska Airlines flight. The company was just starting to get to the point where it was moving beyond the fallout from that accident, really ramping up jet deliveries and getting its production line back, to the point where it needed to be to flow properly and ensure that, the kinds of mistakes that led to that mid-air blowout didn't happen anymore. And so certainly this comes at, not a great time for Boeing.
And
or
I am
anybody
curious
for
too,
that
and
matter.
it's also kind of this idea too that Boeing was not only sort of trying to recover from the optics of that, but of course we go back to 2018, 2019, the Lion Air crash, the Ethiopian Airlines crash as well, which led to a lot of questions about Boeing's management. I know they have new leaders, and again, not drawing any connections to what happened earlier today, but there is this idea, this perception in the minds of investors and potentially in the minds of travelers about what Boeing is and whether Boeing planes are safe. And I do wonder how Kelly Ortberg navigates that now that you have yet another fatal crash involving one of his planes.
And I think ultimately, Airbus has also been clear that these accidents are not helpful for Airbus either. While they have involved Boeing jets, it does sort of create a perception that builds on itself that air travel is not safe. And that's not helpful for anybody in the aerospace ecosystem. And, the engine makers, the parts suppliers, they've all talked about that this industry only works to the extent that it has if everybody feels comfortable getting on an airplane. And so it certainly is, a public image crisis that Boeing itself will have to grapple with and really need to reassure the traveling public that its airplanes are safe and it's okay to, board them. But this is really an issue for the aerospace ecosystem writ large, including the airlines, and really just communicating that to their passengers and easing some of those fears that people will have.
Yeah, Brooke, you do make the good point. Again, it's too early to say whether or not this is a Boeing issue, what exactly went wrong, but that brand perception, the potential damage there is certainly real as well. Appreciate your time this morning. That is Bloomberg's Brooke Sutherland, and we will continue to monitor this developing story and bring you updates as we have them. This is Open Interest.
Welcome back to Open Interest. Let's get a quick check on some of the stocks that are moving here on this Thursday morning. And let's start off today here with what's going on with Unilateral Foods. The share is down for a fourth straight day, now down almost 27% this week. We had learned on Monday about a hack of the food supplier. This is the major supplier for Whole Foods here. They have not yet resolved it. They are apparently working with their cybersecurity provider to try to get things under control. That is moving to the downside. When you talk about some of the other big movers on the day, I want you to take a look at two here right behind me. That has to do with Oklo. Just yesterday, they announced a big contract with the Department of Defense. The shares rallied more than 29% on the day. They're pulling back today after, they decided to move into the secondary market, a dilutive share offering. That's moving the shares lower by about 2%. Dilution, also the story of the day for GameStop, moving down about 17%. A convertible bond offering there, presumably to be used to shepherd that Bitcoin strategy moving forward. Meanwhile, you have two interesting stories in the tech space here. We have Adobe. They're set to report earnings after the bell tonight. This is a bit of an AI play, but keep a close eye on their pricing power. That has been a big driver of this stock, a big driver of their bottom line. Just yesterday, also in the AI space, we did hear from Oracle having one of their best days going back a couple of months, and at 197.92, I believe that is a record high. AI infrastructure build out. That seems to be relentless. And right now, Katie, it seems to be going strong. Unfortunately, right now, you can see on the red behind the screen on me, that is not quite enough to lift the broader market here. But on an individual stock basis, Katie, Oracle is the star of the show.
Yeah, let's go back to that green. Let's go back to Oracle and talk about it now with Anurag Rana. He is senior analyst for Bloomberg Intelligence. Oracle, your biggest gainer by far in the S&P 500 right now. And it seems like the takeaway, Anurag, is that demand for AI infrastructure, it's still super hot right now.
Yeah, I mean, that is the biggest theme right now is the infrastructure investments that are happening around the world for AI. And, we already know that Amazon's a big player, Microsoft's a big player, Google's a big player, and, Oracle with their cloud infrastructure is really making a lot of movement over here because they're getting work from everybody at this point. The backlog is huge. They are investing a lot more to expand their data center. And there aren't that many companies around the world that can, afford to spend, let's say $25 billion per year to expand their data center footprint. So that's really helping Oracle, and I think that's a story that's going to go on for at least the next few years.
I am curious what the secret sauce is. I mean, obviously we know their involvement in Stargate as well as some other projects. There was a big headline earlier today on the Bloomberg terminal about how Temu, seeking to deal with some of the trade tariffs, is enlisted Oracle's cloud domestically here in the U.S. to aid their efforts here. Why are these folks choosing Oracle specifically?
Yeah, I told you the secret is $25 billion. This is a company extremely profitable that can go out and spend and expand data center. That's a number you can't really expand, think about any company in the US do that. So when we know the demand is really high, companies that have capacity to invest. So Oracle makes a lot of their revenue from their database business, from their applications. Very high margin business. Their operating margins are, adjusted operating margins are in the 40s. So they generate a lot of cash flow and they have the ability to invest, and that's really what's happening here.
So AI infrastructure, that demand's still very strong right now. What about for software? Push ahead to Adobe after the bell. That's a company that really needs some good news.
Yeah, this is the most controversial stock in software, honestly. And, we are hoping that they don't reduce their guidance. If they're able to beat their numbers and even take it slightly up, I think investors will gain some confidence. But there is so much, controversial, you could say, stories around this, bull-bear arguments about what's going to happen to their creative business. We think it's going to be fine, may not be able to grow as fast as it has historically, but, widely debatable stock. And honestly, it's going to be a very interesting print today.
Yeah, absolutely. That is Anurag Rana of Bloomberg Intelligence with the preview. Adobe shares down 7% year to date on a total return basis, have rebounded strongly since their lows in April, but still in need of some good news.
I would like to point out, I host a show called The Close,
I've heard of that.
on. We're actually going to cover Adobe earnings, and also
I would imagine
another big earnings report too is RH. This is the company formerly known as Restoration Hardware. Gigantic couches,
heard of that one too,
gigantic prices. So you get a read on consumer spending as well.
Yeah, that's all coming at 4 p.m. today. You're opening and closing the markets today.
Wire to wire, Kate. You can stick around too. You're more than welcome.
I will be watching fondly from afar.
From your big Restoration Hardware couch.
Exactly, from my giant couch in New Jersey. Coming up in the next hour, we're going to continue to follow these markets with Marianne Bartels of Sanctuary Wealth. She'll explain to us why she just raised her S&P 500 price target above 7,000.
This year?
This year. Well, maybe in the next 12 months. We'll get the details from Marianne next. That's her 12-month target. We're also going to talk about the resurgence in nuclear power with the nuclear physicist and the CEO of Nano Nuclear. His name is James Walker. All of that coming up in the next 60 minutes. Don't go anywhere. This is Open Interest. All right, we are 30 minutes into the trading day, looking at a pretty tired tape. The S&P 500 trying to go green, not quite there yet. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld.
And I'm Romaine Bostick. Matt Miller on a very beautiful assignment, Katie Greifeld.
Yeah, he's off in France. We'll hear from him a little bit later this hour, but let's take a look at these markets. There's not too much to talk about, which is surprising because there's been a ton of news.
Yeah, and it's kind of been this holding pattern, right? This idea maybe the best case scenario is already priced in and the worst case scenario has already been priced out. And there you have an S&P 500 that's still pinned right around that 6,000 level. That's been the pivot for the last few days.
Yeah, it'll be fun to see what pushes it above or below. We'll continue to track these markets, but coming up, a Boeing airplane crashes in India. It's set to be the worst accident involving the plane maker's most advanced wide-body airliner.
And President Trump renews his tariff threats. The president plans to set unilateral levies within the next 2 weeks, ahead of an earlier deadline.
And U.S. power demand is on the rise, driven by tech firms that need to power artificial intelligence. We'll get some insight from the CEO of Nano Nuclear.
Meanwhile, we have all eyes right now on the U.S. Treasury Secretary, Scott Bessent. He's back on Capitol Hill, this time to testify before the Senate Finance Committee. They're just getting set up there. We're going to bring you any headlines out of that as soon as they come. And of course, you can watch his testimony in full as he takes his seat and the photographers get their pictures. Just type Live Go on your Bloomberg terminal.
All right, let's go back to these markets. Yesterday, Bloomberg Television spoke with investor Jim Chanos about this current bull market.
This bull market is going to go until, it doesn't. I keep telling people we're going to need to fill every last bull, and Wall Street will do it. Mm-hmm. They took a good shot at it in 2021 with the advent of SPACs and NFTs and meme coins, and we're going to see that happen again, going forward.
Let's speak to one bullish investor right now. Her name is Marianne Bartels. She is Sanctuary Wealth Chief Investment Strategist. Last week, Marianne raised her S&P 500 price target to 7,200 over the next 12 months. Marianne, I was shocked to see this because you are seeing some of the sell side upgrade their targets right now, but just by a hair or two, 7,200. What gets us there?
So, Katie, tariffs were just a temporary interruption, and I know we still have to deal with some tariffs. We entered the year with a 7,200 target, and we instituted again over a 12-month time frame, indicating to investors that the whole AI trade, robotics, crypto is still where the bull market is. And we believe in time, you're going to see the market trade to new highs. We think we'll do that in the summer. Right now, you used a very good adjective. Markets are tired. They're overbought. We can get some little choppiness in here. But we think we will eventually break out to new highs because the momentum is still very strong in the growth section of the market, which is tech and tech related.
I am curious about how we get there, Marianne. I mean, there are a lot of folks who are, I guess, turning a little bit more cautiously bullish on the rest of the year. But some of them have talked about this idea that the path there may be a little volatile. We may even have to retest some of those correction levels that we saw back in April.
Well, I'm certainly in the camp that we're not retesting. I have all the indication that the lows are in. And what gets us there is the economy is still strong. Employment is still very strong, even though we've seen a little bit of weakness. It's been strong. And when we look at the consumer and we look at disposable income, we look at the saving rate, even when we look at income per capita, the consumer in general is fine. Now, is there a pocket of the consumer that has some spending constraints? Yes, but overall, the consumer is fine. And since the consumer really drives the U.S. economy, we think that's going to allow the markets to continue to go higher. In addition to that, business tax revenue has been skyrocketing, and that has a very good correlation with the Atlanta GDP tracker. And that's tracking the economy growing over 3%. I think that maybe is a little volatile, but the point is the economy is growing, the consumer is strong, we're at full employment. That will drive earnings, and earnings will drive the market.
And that will put the lows in the rearview mirror, according to your worldview. I do want to talk a little bit about where you're finding the most opportunity in this market. It's been hard to ignore the run that gold has been on, trading above 3,400 an ounce earlier today. I know that that has led you to the gold miners, but it feels like they always tend to lag behind the performance of gold itself, Marianne.
Yes, they have lagged, and they've lagged very badly, but not anymore. We're really getting really nice momentum. I think people have woken up that gold prices are going to stay high and that they're going to go higher. Our target for a while has been 4,000 on gold. We're still very comfortable with that. But now we're starting to see the metal stocks, and sometimes they lag because companies hedge their gold position. But with the gold juniors, which are the riskier part of the market, breaking out of 11-year trading range tells us that now that there's significant upside. I mean, these stocks are up a lot already year to date, but we still see significant upside because we continue to see gold prices not only going higher, but staying higher.
So potentially higher risk reward there. But just to meditate on gold for a little bit longer, some of the commentary I've been reading the past couple days for an explanation is perhaps this speaks to this U.S. exceptionalism trade losing its appeal. That's why you're seeing gold go higher. That's why you're seeing the dollar break down, at least according to the Bloomberg Dollar Spot Index. If that's the case, Marianne, that U.S. exceptionalism truly is trading, U.S. assets are losing their appeal, does that give you any pause when it comes to your price target for the S&P 500?
Not if my thesis that technology is going to drive this cycle, because I think they can leave, but they're going to wind up coming back in order to maintain performance. The true leaders in this market is, as you know, are the semiconductors. They had a really good correction. We were looking for a correction in the semis. We think that's done. And we think the semis are the leaders to watch. We think eventually they're going to get out, break out to new highs. And when we look at, remember the old FANG index? Meta is in there with Facebook, but now it's an M. That's already broken out to a record all-time high. We're seeing the Magnificent Seven continue to rally. So the leadership is back. And if investors overseas have sold these stocks, I think they're going to wind up coming back. I don't think we've really lost our momentum. Now, that doesn't mean that the European markets and some other international markets are not doing well. They actually are. We believe Europe is in a new secular bull market. And it's okay to have some assets move overseas. But with what I believe will happen is that the performance will continue in the United States, not just this year, but throughout the decade. Our long-term target on the S&P is 10,000 to 13,000.
When we talk about that momentum, Marianne, there's been a lot of talk, of course, about how a lot of the rally that we've seen off the lows in April was driven by the retail side. I am curious, if we do get more institutional involvement in this rally, does that accelerate potentially the path to your price target?
Bingo, absolutely. And anyone that's short was going to have to cover and go long. And from the data that we're looking at, particularly fast money, generally hedge funds, CTAs, they're not necessarily very long this market. So if we do get a breakout, any of those momentum models are going to give very strong buy signals. But we don't think that's going to happen until the summer. But we do think in the very near term, you can get a 3 to 5% pullback. We think that's another buying opportunity. And then as we head into the summer, we hit new highs, which, by the way, is seasonally normal. And the month that we normally get the highs is in August. And another thing, we've been tracking this market relative to 2018, the last time Trump was in office. And the market is surprisingly following that pattern. And if we followed that pattern, we would hit new highs in August.
All right, Marianne, that's a good place to leave it. Great to get some time with you, as always. Our thanks to Marianne Bartels of Sanctuary Wealth. Let's dial down and take a look at a single stock on the move this hour, Voyager Technologies. It's a space firm. Remember, it IPO'd yesterday in an upside offering. It's up 3% today. Bloomberg's Nora Melinda has been following this company. So 3% today, 3.5%. That looks pedestrian to what we saw yesterday. 82% on the day. What's going on with this IPO?
Right. I mean, yesterday at one point we were seeing it rising for triple-digit gains. It ended up ending up about 82% yesterday. And it really was an upsized IPO that was really well received by the market. I actually had a conversation with the CEO, Dylan Taylor. He came on Bloomberg Business Week with myself, David Gura, and Ed Ludlow. Ooh. And he was talking, it was a great conversation. He was talking about just what the dynamic is like right now for aerospace and defense. I mean, of course, you have SpaceX that's really been in focus. But what's really interesting here about Voyager Technologies and what's really getting investors super invested in the stock is their project called Starlab. Now, this is a JV with Mitsubishi, Airbus, Palantir, but essentially NASA gave them a grant for $200 million plus, especially we do know that the ISS is being decommissioned by 2030. So they're really pumping a lot of money into this project, and that's really what's been propelling the stock forward here.
It's kind of interesting. Is there something we can extrapolate just about broader sentiment with regards to IPOs? I mean, I know, yesterday Voyager was a big deal. This morning, Chime rang the opening bell, and we're waiting for that to price as well, the fintech company. And we've had several others, eToro and a few others, finally come out the pike. And this was a much different sort of environment today than even where we were, I don't know, just about a month ago.
Most definitely. I mean, I think when we think about the boom of 2021, of course, we're not there right now, but we are seeing ourselves on a road to recovery. You mentioned Chime, of course, Voyager Technology. So we're starting to hear some of these names really popping out and seeing some more activity here in the U.S. IPO market.
Yeah, it's interesting. You've also seen a few crypto offerings lately as well.
I try to ignore those, but I can't.
Yeah, me too. It's hard when they're going crazy on the stablecoin space. But so talk to us about the path forward for Voyager. You spoke to the CEO yesterday. Obviously, they're having a great week so far. What do they plan to do with all of this money that they've raised?
Yes, it's a lot of money that they have raised. That's $383 million that was raised through this IPO. But they're really just trying to propel Starlab forward. That's really what their focus is right now. Of course, they're also trying to tackle some of the initiatives that Donald Trump is doing in terms of the Golden Dome. So, it's a bit, we're trying to, iron out the details there as to what that exactly will mean as we think about aerospace and defense more broadly. But we definitely are seeing a lot of activity right now. I'm looking at an index of aerospace and defense stocks. It's up about 20% so far this year. So they're doing quite well.
All right, Nora, Melinda there, taking a look at Voyager, 82% pop yesterday, up about 3% today. The S&P 500 and NASDAQ, which opened in the red, now pushing higher into the green. Let's take a look now down in Washington, where the U.S. Treasury Secretary is addressing the Senate Finance Committee. Round 2 for him. We're going to continue to monitor those headlines. You can monitor them yourself by typing Live Go on your Bloomberg terminal. This is Open Interest.
For Donald Trump and Republicans to hide behind the flimsy claim that this will not cut benefits is absurd. To say their bill protects seniors and kids and veterans and people with disabilities is absurd. It's insulting to the intelligence of millions of people who have health insurance today.
All right, time now for High Interest, to look at what's making headlines around the world. And we start with those heightened tensions between the U.S. and Iran. Negotiations over a potential nuclear deal appear to have stalled, and now the U.S. is ordering some staff to leave its embassy in Baghdad, Iraq. The State Department also saying U.S. government employees and family members in Israel are restricted from traveling outside major cities until further notice. Next up, Mattel teaming up with OpenAI to use its AI tools to design and power toys and games. The technology may result in the creation of digital assistants based on Mattel characters, or be used to make toys and games like the Magic 8 Ball or Uno more interactive. Mattel CEO has been looking to evolve the company from just a toy manufacturer and into producers of films, TV shows, and mobile games. And the dollar falling to its weakest level in 3 years. Worries over U.S. tariffs and the outlook for the U.S. economy down 8% so far this year. Wall Street warning there could be more room to fall. The decline today coming on the heels of a U.S. producer price inflation data point that showed inflation staying muted in the month of May.
Well, let's get back to this morning's top story, and that is that over 200 people have been found dead at the crash site of a Boeing 787 Dreamliner operated by Air India that was bound for London. The flight crashed shortly after takeoff in Western India. It's the worst accident involving Boeing's most advanced aircraft. Now, police say there may be survivors. For more, we're joined now by Bloomberg's global aviation correspondent, Sid Phillip. And Sid, since we last spoke, we're starting to get more details here as to fatalities and potential survivors.
Yeah, we are. So we're still not clear on how many survivors, if any, were from the crash. But the police did sort of say that survivors have been taken to the hospital. I mean, they remember the aircraft crashed into a residential building. It was a hostel for college students who were eating lunch at the time of the incident. And so we're not sure whether the survivors that the police are referring to could be from the hospital, the medical college hostel, or from the aircraft. But at the same time, the police did confirm that over 200 dead bodies have been pulled out from the crash site. And so it does look like it is a very tragic accident in terms of the aircraft itself. And obviously, this is the first ever fatal crash for the 787. The model's been operating for over a decade now, and it's Boeing's most technologically advanced model. This is not the 737 MAX, which was previously involved in other crashes, but it does add scrutiny onto Boeing, which is in the process of rebuilding its reputation following those crashes, as well as the door falling out last year when at the Alaska incident.
Absolutely. And we should point out, of course, it's still going to take some time to figure out exactly what the cause of the crash is. You have almost 1,200 of these planes, the 787s, I should say, in service at the moment. Sid, with regards to just the complexion of the people that were on that plane, I know it was bound for London. Were these primarily Indian nationals? Were they UK citizens? Do we have a sense?
There was a mix. So we have the manifest of the passengers, And the vast majority of those on the aircraft, 169 of them, were Indian nationals, but then there were also a significant over 50 British nationals on board, as well as some Portuguese nationals as well. So it is, it is primarily Indian nationals, but other nationalities were also involved in the passengers who were on the plane.
And Brooke Sutherland made the point to us a little while ago that, of course, it's too early to know what exactly caused this incident. It's unclear whether or not it was Boeing at fault here. But set the scene for us when it comes to the Paris Air Show, supposed to start on Monday. We know that Boeing CEO Kelly Ortberg was scheduled to attend. Our reporting shows that it's unclear whether his plans have changed at all. But have we heard from Boeing, the company? What has the response been like?
So far, we haven't heard a lot from Boeing at the moment. We've just heard Boeing has talked about how they are willing to support Air India in the investigation. We've heard similar comments from the FAA and the NTSB saying that they will be assisting with the investigation. The investigation obviously will be led by the Indian authorities. I mean, typically when a crash like this occurs, the country where the crash occurred is the country that leads the investigation, but there is support from the aircraft manufacturer. You have support from other entities like the NTSB and the FAA, as well as the engine manufacturer. In this case, the engines were made by GE. So I'm sure all those parties will be involved in the investigation to determine what really went wrong with this plane and what caused it to crash.
And of course, we've already heard from the Prime Minister, Narendra Modi, calling it heartbreaking beyond words. And we should point out, I mean, accidents, air accidents, Sid, in India itself, at least of these larger commercial airliners, are relatively rare, are they not?
Yeah, they are. These sort of incidents are very, very rare, and India has a fairly stellar safety reputation. I mean, the last crash of this magnitude for Air India occurred in 1985. So there haven't been any sort of similar incidents on this sort of scale in the past couple of years. So we do have a country where they have a stellar safety record. And at the same time, it is a market that is growing. I mean, India is now the world's third largest aviation market. And airlines, including Air India and Indigo, which is the market leader, have been ordering record numbers of planes, and there is an expansion of aviation in the country. So, I mean, Air India is itself in the midst of a transformation. I mean, they were state-owned for the bulk of its existence over the last 50 years, and they just got taken over by India's Tata Group, which is one of India's biggest conglomerates. And Tata is in the process of revitalizing Air India's fleet, as well as adding services to other destinations around the world.
Well, Sid, we appreciate your reporting on this story. Our thanks to Bloomberg's Sid Phillip. We'll continue to monitor this developing story. This is Open Interest. Welcome back to Open Interest. Let's take a look at the breakdown of this market right now. The S&P 500, it actually managed to poke into the green. You can see there's still more downside movers than there are upside, but you have one big one at the top, and that is Oracle, briefly touching a record high today after it reported earnings last night. You can see shares up 13% right now on a points basis. It's also your biggest mover. Then you have NVIDIA, Microsoft, Broadcom, Cisco trying to add to this rally right now, but they're fighting against some pretty big heavyweights on the downside. Up at the top, you have Apple, a small move overall, but when you think about how big Apple is, that's your biggest contributor to the decline from a points basis. Then you have Alphabet, Boeing also having a very difficult day, Meta as well. Let's take a look at how this plays out on the sector level as well. Up at the top, you do have utilities is your biggest gainer today from a sector perspective. Then you have the lights of tech, real estate, healthcare, more in the red, industrials, energy, financials. I actually want to click into tech, Romaine, because it's going to show what we were just talking about, that your biggest gainer right now is Oracle. The readout from Oracle earnings was, of course, that AI infrastructure demand remains very strong. I don't know what that says about demand for software, though, but we'll get an update from Adobe tonight. Yeah, Oracle reported last night. Adobe reporting after the bell tonight. Expectations high. Basically, analysts looking for about $5.8 billion in revenue, $498 on the bottom line. We should point out the last 3 quarters, Adobe actually surprised to the upside on both its quarterly earnings as well as its guidance, but the stock fell each time
after those reports the following day. Right now, the implied move up or down about 7%.
Yeah, we'll see what that bodes, that past performance for these future results. But certainly Adobe has had quite a rough ride. I know that you'll break down those earnings after the bell today. But before we get there, coming up, President Trump is pushing for the U.S. to reclaim its edge in nuclear energy. James Walker, Nano Nuclear CEO, joins us next. This is Open Interest.
All right, nuclear power, it's so hot right now. Shares of Oklo had a monster day yesterday on the back of an announcement that it is potentially the intended awardee of a contract to build some small nuclear reactors at a U.S. Air Force base out in Alaska. The shares pulling back just a little bit today after the company into that rally basically said that it would raise an additional $400 million in a secondary equity offering. This as President Trump really looks to accelerate the construction of nuclear power plants across these United States of America. Will Wade leads our coverage of renewable energy here at Bloomberg. And Will, let's talk about exactly what companies like Oklo are doing, because when we think of nuclear power plants, we think of those big, gigantic reactors that we see kind of on the skyline. They're building something a little bit more small scale.
Yeah, so Oklo and their peers, there's a couple dozen companies, they're trying to do what's called a small modular reactor. And the basic idea is you can build the parts in a factory and then ship them out to wherever they need to go and assemble it on site. So they say that'll make it faster and cheaper to build than the big conventional plants, but they're smaller. So, I mean, maybe is up to 300 megawatts. The big conventional plants, typically 1,000 megawatts a gigawatt. So the smaller also can give them a lot of advantages because maybe some places don't need a giant gigawatt nuclear power plant, or even really small ones that you could use in factories or up in Alaska, because the basic product of a nuclear reactor is heat. So in Alaska, heat's going to be really useful. Or a lot of factories, they want that heat for like a chemical factory. So it's a totally different design.
Right. So situate, what we're seeing in Oklo right now in the moment that we're living in, because it seems like, okay, so you've seen these shares pop off in the last 2 days, but Oklo and its peers have been on quite a run in the last couple months because it feels like there's just so much excitement around nuclear right now. Is that solely because of AI, or are there other components as well?
AI is a lot of it. AI needs a lot of power, but let me temper that enthusiasm. What we're seeing for the shares is excitement about the future, because none of these are going to be ready anytime soon, like years. Like maybe if we have a couple by the end of the decade, that would be great. But they are years away from being able to actually deliver any of this.
Yeah, I mean, we're talking about a company that basically doesn't have much revenue at the moment, despite the big jump that we've seen in the share price. But that gets to this idea here of like, what's the future that we're building for? There's been a lot of back and forth on what U.S. energy policy is. Is it still rooted in fossil fuels? Is it solar, wind? Is it something like nuclear? Or are we now looking at a future where it's going to kind of be check all of the above?
I think it's going to be all of the above. There's a lot of excitement for nuclear. The thing about nuclear is it runs all the time, like a coal plant, like a gas plant. And unusually in the energy world, it's got support from the left and the right. And now it's got all this big tech money because all those data centers, they're dying for that power. And they really need power that runs all day and all night, like a nuclear plant can give it. They just can't give it to them now.
All right, well, great context, really great setup for our next conversation. Our thanks to Bloomberg's Will Wade. And for more on the changes underway in the nuclear power industry, I'm pleased to say that we're joined now by James Walker. He is the CEO of Nano Nuclear. James, it's great to have you with us. And I'm curious about how far we can go in describing the enthusiasm that we're seeing at the moment right now. Can I go as far as to call this a nuclear renaissance, or are there certain milestones that you think the industry needs to achieve first?
Well, I think it's fine to call it a renaissance. We've called it exactly that. So, and it's a very unprecedented time. It's come at a time when the government are pushing very hard on nuclear at the same time that industry is pushing very hard on nuclear. And, we've not really seen that before, that you get industries like the tech businesses needing this kind of power because their projected energy demand is way in excess of what the national grid is capable of producing. So a renaissance, I think, is completely fair. So.
What's kind of the time frame? I mean, we were speaking with Will Wade, who covers this for us, and he kind of talked about this idea that it's going to take a while before we actually see these things up and running. Specifically for Nano, what's your runway looking like?
So Will's correct, actually. Before the end of the decade, you're going to see a number of licensed reactor systems that are going to be available for market. I think the mass production of these reactors and the mass deployment of them is going to be very dependent on building back the fuel supply chain within the U.S. Now, look, the U.S. is taking big steps at the moment to do that. The DOE has put billions back into private industry to build back big infrastructure projects so that can happen. But that it almost is like, you know, starting again in nuclear, like we were in the 50s or 60s, where we're building everything at the same time. I mean, this will all happen. This all is an investment in the future. But like early 2030s, you'll see the mass rollout of these systems, but in a different way to how we've seen nuclear roll out before. So, you know, big civil nuclear power plants, great, but now you're seeing them for industry, remote locations, areas where nuclear has never been before, and also areas where other types of energy, you know, gas, wind, solar, geothermal, hydro, they're just not well suited for. But nuclear can be put anywhere. And so it's going to be a fairly revolutionary change in the energy landscape.
Well, to that point, that nuclear can be put anywhere, and in your words, it's being put in places where it hasn't before, in more remote locations. What does the pushback look like? Because my mind goes to environmental groups, for example. I would imagine they would have something to say.
Yeah, you know, nuclear, it's unfortunate, but I think the difference between the reality of nuclear and the public perception of nuclear has always been so divergent that it needs good communication. I like to tell people that if you were to look at deaths per gigawatt hour, nuclear is already the safest form of energy that's ever been developed. But these new reactor systems, they're even safer still. They can't have the conventional meltdown that a big nuclear power plant could potentially have. They can be co-located even, you know, say if you build a big data center, you can put your reactor just next door to it, and you can't get a reactor core melt or anything like that. They are inherently safe systems. So you've taken already the safest form of energy and you've made it still safer. I think there just needs to be very good public communication around the new nuclear, because just so people can get an understanding of just what a benefit this is to us, you know, to humanity really, and to not just industry, but like it should be fairly revolutionary across the world in terms of opening up, you know, human labor and providing power where essentially it's not been possible before.
I am curious about the competition in this space, and I know you're relatively newly listed, Oklo and a few others also newly listed here. Are we in a situation, James, where we could see maybe some consolidation amongst some of the newer players, particularly when you talk about sort of the curve, the technological curve, in actually being able to produce these things?
So the interesting part here is I think the technologies are all fairly well known about, and there's good degree of confidence in a lot of the tech that's being designed and proposed at the moment. I think the real bottleneck will come when it comes to which companies are really able to fund this. And obviously companies like ours, like Oklo, the fact that we listed at very opportunistic times, just ahead of this sort of research, this sort of big market interest, enabled us to raise the necessary capital so we could build these reactor systems. That is a big filter. So even though you've got a number of these companies, I think you mentioned something like a dozen earlier, but it's really going to come down to sort of a handful of companies that are well capitalized enough to build these things. And you know, our own company, we're proceeding with the construction of 2 prototypes, one in the US, one in Canada at the moment, that will be licensed. That is a very different proposition to a lot of companies at the moment, because they might not have the resources to go and do that. So yeah, it will be sort of filtered down. I don't know about a consolidation where we sort of all buy each other, but yeah, you're going to have sort of a handful of companies being able to build these, get them all licensed, and then be able to mass deploy these and mass sell them.
So maybe not consolidation, but before we let you go, James, I'm curious how much time you're spending courting these big tech companies, because, for example, the big news in the last few weeks was that Constellation has agreed to sell power from one of its Illinois nuclear plants to Meta. It also has a similar sort of deal with Microsoft. And when you look to the future, I would imagine that you would also like to see some of those contracts come your way as well.
Yeah, I mean, I won't be shy. I mean, we are still talking to those guys. I mean, those conversations are very ongoing. They need power, and they don't want to get to a point where the sophistication of their tech plateaus because of energy constraints. So it's not that they're desperate, but they need solutions. And the nuclear represents a very new way for them to actually meet to get those solutions in. They can move it they can put themselves anywhere. They can co-locate with nuclear. And the good thing is it doesn't need massive national infrastructure upgrades to be able to outlay that amount of power. And you can scale it, and it has a high baseload energy. So it's a very unique proposition, I think, in terms of nuclear energy history. So yeah, we're obviously talking to those guys. They're very likely to be a big customer of ours in the future. I mean, to be honest, if you look at some of their projected energy demands, I think they could eat up pretty much all the nuclear energy we project to bring online.
All right, James, appreciate you taking time for us. Obviously, all eyes right now on this industry. A really exciting time for you. Nano Nuclear there. James Walker helps lead that company. All right, let's get a quick check on what's going on in the markets. Katie Greifeld, it's not just all nuclear stocks. You're seeing the S&P 500. You're seeing the NASDAQ 100. You're seeing even the Dow Jones Industrial Average. If Matt Miller were here, all pushing into the green after opening earlier in the day on the red.
Yeah, I haven't looked at that one in a long time. I like to, tussle with Matt about whether we should look at the Dow or we should look at the small caps, but we should look at the S&P 500 because we are back in the green on pretty low volume, but sort of changing tides from what we saw yesterday with that slight drawdown.
Holding 6,000 level on S&P 500, and I think at least psychologically that's good for a lot of folks. They really want to see that. That has been the main pivot point. And remember yesterday, you talk about the pivot point, at least the path of resistance, the path of support, it's pinned right around that 6,000 level.
Probably doesn't hurt that the bond market seems to be cooperating with the rally. You see that big drawdown when it comes to yields. That could change at 1 p.m. today when we get that 30-year auction, but that's someone else's problem. Let's take a look at some of the individual stocks moving in the tech sector because we're joined now by Bloomberg Tech co-host Ed Ludlow joining us from San Francisco. Let's start with Micron. The headlines out this morning that it's pledging $200 billion to invest in the U.S. Ed, it seems like shareholders not too impressed with that number.
Yeah, although it's a stock that had already been up for 8 straight sessions, right? And broadly, investors are still worried about overcapacity because each participant in the build out of data centers and compute infrastructure is like super committed. We'll get onto Oracle in a moment, right? But this is kind of one where you have to do the math against prior announcements. It's 200 billion, 150 billion for manufacturing, 50 for research, R&D. They had said about 2 years ago or 3 years ago that it was 125 billion. They're now saying it's net new 30 billion, and all of those numbers don't add up. But the main point is that they are committing to building facilities across this country, New York State, Idaho, Virginia, and what they produce, high bandwidth memory, is critically important when you think about the compute design of server designs that are used for training large language models, AI models, or indeed the inference side. And it's a fast area of growth.
Fast area of growth, 30 million being added to that here. Of course, the big headline there, the 200 billion obscures a little bit of that. I do want to talk about Oracle, Ed. That is the star of the show on the day, a 14% pop in the stock, back to a record high. If you could say an old tech company that has really firmly established itself now in new tech and the AI build out.
Absolutely, like its financial forecasts basically reflect that it's catching up with hyperscalers. It's becoming, the partner of choice to build data center infrastructure for. So the big headline is that their sales will grow 70% in the fiscal year. But they basically have a backlog of business that's in excess of $130 billion. They are the partner on OpenAI's Stargate project to build just intense and hyperscale data center infrastructure starting in Abilene, Texas, but likely to expand elsewhere. And what's interesting as well is that they also talk about some of the Chinese technology companies that they've onboarded as customers. So it's a big projection of strength, and clearly investors with this 14% jump are cheering the role that Oracle's playing in the data center build out.
Yeah, big time. Oracle shares briefly hitting a record high today. Ed, I know you're going to have much more coming up at 11 a.m. You can catch Bloomberg Tech with Ed Ludlow and Caroline Hyde.
Did you ever see Stargate, that movie with Kurt Russell?
No.
Yeah, it didn't end well.
Yeah.
But I think this is a little different.
I
Yeah.
hope so. I haven't seen like any movie.
It was like when they had a portal to like in time, and
Yeah.
he went back to like ancient Egypt, and they had to fight like, you know.
Sounds dangerous.
Yeah,
well,
it was
I'll
good
put
movie.
it on a very
Sorry.
long list. That's the
That
first
should be number
rule.
one on your list.
First rule of this show, I haven't seen any
Right after
single
sliding
movie.
doors.
Yeah, there you go. All right, coming up, it is becoming a Wall Street throwdown. Jim Chanos and Michael Saylor trading barbs in Bloomberg television interviews. We'll bring you the highlights next. This is Open Interest.
I am selling MicroStrategy securities to buy Bitcoin. Let's be clear, it's a hedge trade. I don't know where Bitcoin is going to go.
And it doesn't matter to you, actually.
Well, it doesn't matter. The premium compressing matters to me. And so it's important to understand that in 2024 and 2025, mostly at the end of 24 and 25, MicroStrategy has sold $35 billion roughly of securities.
That was famed short seller Jim Chanos speaking with Bloomberg's Scarlet Fu yesterday. Now, when I spoke to Michael Saylor the day before, he said that Chanos wasn't understanding.
You know, I don't think he understands what our business model is. We're actually the largest issuer of Bitcoin-backed credit instruments in the world. So last week, we just raised $1 billion by selling a preferred stock, non-cumulative, called Stride. That means we basically borrowed money that we never have to pay back, that we pay a dividend on, but we could suspend the dividend if we needed to. So Jim has been thinking that we somehow needed to sell the equity. So at the end of the day, if he's lucky enough to short the stock below 1x NAV, we're going to issue the preferreds, buy back the stock, and make money for our shareholders. If the stock trades at a weak premium, we're just going to sell the preferreds. And if the stock rallies up, he's going to get liquidated and wiped out.
Joining us now with more on the feud is Scarlet Fu. She is co-anchor of The Close. I'm surrounded by anchors of The Close.
We're encroaching on Open Interest.
I know, I'm a little bit scared. It's a little bit of a sandwich here. Anyway, let's talk about how this all started. We had that call from Jim Chanos, and my understanding it basically was to short shares of strategy and buy Bitcoin.
Right, and he says he's doing basically what Michael Saylor is doing over at MicroStrategy. He's selling the stock and he's buying Bitcoin. Now, Michael Saylor will say right now he's selling preferred shares, but as Jim Chanos was pointing out earlier, in 2024 to 2025, Strategy sold about $35 billion of securities. $33 billion of that was common shares and convertible bonds. Only $2 billion of that was in preferred. And Michael Saylor has made this point that the preferred shares they're not redeemable, right? There's a dividend paid on it, but they're not committing to necessarily pay the dividend. So in that case, who's going to end up buying these preferred shares? That's a big question.
I'm curious, though, too. I mean, so Chanos, I mean, in the interview, he talked a lot about this premium that MicroStrategy has over Bitcoin. But, and I'm just playing devil's advocate here, I mean, Saylor would argue that, I mean, his whole structure is a leverage play, so why wouldn't there be a premium?
Well, what Jim Chanos is saying is, why would you go there and have the agency risk of Saylor maybe doing something that could jeopardize the company in some way or send the stock lower? You don't necessarily need to do that. You can just go in, buy Bitcoin on your own. There's plenty of other vehicles to do that, including ETFs, which Katie and I cover every week in ETF IQ. The other thing about the premium narrowing is that it's only really gotten to about 2.2 or 2.3, at most maybe almost 3, but it's averaged around 1.8. So he just needs it to go lower and be able to cover his short. He doesn't necessarily need it to go below 1.
Right. It doesn't need to absolutely collapse. It just needs to shrink a little bit. On preferreds, it's interesting, Chanos' comments there. It's when it comes to preferreds, we asked Saylor about this. Who are you in competition with? And he said he's not necessarily in competition with other Bitcoin treasury companies because there's a lot of copycats out there at this point. He views himself as in competition with ETFs that track preferred shares, which I thought was interesting. Invesco has a product, for example, that's about $4 billion in AUM.
I feel like you're doing derivatives of derivatives of derivatives. Why not just go to the ETF itself? Or there's a more direct way of doing this where you don't have to pay costs along the way.
just point out that right now in my mind, I just can't even wrap my head around any of this stuff, what you're talking about. I mean, but it gets to this idea, I mean, to your point about, why not just go directly? And I guess the question is, isn't direct still not necessarily the most seamless process? There's still a lot of fees that comes with that. I'm talking about buying directly, Bitcoin directly or crypto directly. And the idea was that you can use Saylor's MicroStrategy strategy as a proxy for that, get the leverage. And with some of the ETFs, you're still paying a fee on top of that. Now, I don't know what the differential between that and whatever you're going to pay to buy the strategy stock, but why can't strategy be that vehicle?
Well, strategy isn't just that vehicle, right? I mean, it's also a software company. It does have operations on the side. I know we never talk about it, but I mean...
That's me smirking. I'll save my comment.
But there is that part of it, and it's run by a person, so there's inherent risk in that as well, right? It's not an actual vehicle of that asset.
I will say that according to the terminal, at the end of March, Strategy had over 1,400 employees. So
they do something.
They do something. Not only they have that software business, but certainly we don't often speak of it. Scarlett, great interview with Chanos yesterday. Great to see you, of course. That is Scarlett Fu. And
hey, stick around.
Don't go anywhere.
You come back and join us at the 4 p.m. hour.
I will be long gone, but I'll be watching.
I've been trying to convince her to stick around all day long. So.
Well, I do actually have to stay later today than usual because I'll be speaking more about the Saylor Chanos Smackdown on my podcast, Money Stuff. I host it with Matt Levine. It comes out tomorrow. You can find that wherever you get your podcasts. There you go. We do have some breaking news here. When it comes to Chime, shares indicated at $42. Remember, the IPO priced at $27. So that IPO market is open. We'll bring you more headlines as we have them. But just to reiterate, Chime shares indicated at $42. The IPO price at $27. This is Open Interest. Well, this weekend, one small town in France will explode with some of the auto industry's best racing drivers and highest level executives. The 24 Hours of Le Mans is part of the Automotive Triple Crown, alongside the F1 Monaco Grand Prix and the Indianapolis 500. Matt Miller will be there, and coming up tomorrow on the program, be sure to catch our special coverage. He'll be speaking with the Hertz CEO Gil West, Ford CEO Jim Farley, Aston Martin CEO, as well as the Belgian racing driver Sarah Bovy. You don't want to miss that, Romain.
Yeah, I mean, look, a big endurance race here, and if you're a fan of motorsports, I mean, this is the one to watch, Katie Greifeld.
Yeah,
buckle up.
I'm excited for Matt Miller, excited to catch some of those interviews tomorrow. This was Open Interest, and this is Bloomberg.